welcome to the Morningstar series Why Should I Invest With You? I'm Emma Wall and I'm joined today by Stuart Mitchell, manager of the SWMC European Fund. Hi Stuart.
Morning.
So Europe, there's a lot going on in the headlines, which I think is concerning investors somewhat because we were told that Europe was on the recovery. Europe was a great place to be after sort of the UK and the US had done their recovering. I suppose we better start with the first negative influence, and that is negative rates. Japan has gone into negative territory and it sort of opens the door for Europe. As a European equities investor, are you able to, work around things like negative rates?
It's a very very kind of confused picture. As a stock picker out in the road visiting companies, the recovery appears to be very much on track. And if we were to look at our universe of companies we're invested in and think of the forecast we made for earnings a year ago and look at where they are now, they've pretty much achieved everything we would have hoped for. I mean, the challenge is, of course, there's a view that with the US beginning to slow down and with the problems in China, that could at some stage derail a rather fragile recovery in Europe. So I guess negative rates is a possibility. It's another way of boosting, trying to prolong the recovery in Europe. But our view is that there's enough recovery, there's enough growth that that won't be needed for certainly in the next few months.
So it could, if anything, be a positive story for European markets.
God, it's again incredibly complex, but at the end of the day, it would probably force banks to lend a little bit more. And although lending growth is beginning to pick up really quite nicely across the Eurozone anyway, but it might just be an extra kind of boost because, of course, it'll cost them to leave money at the ECB. So it would make sense for them to try and find people to lend to.
Now, you've mentioned banks there, and that's the other big story about Europe at the moment. There has been some concerns about the European banks, and that's actually, contagion has pulled down European stock markets in general, which of course could be a buying opportunity. Do you have exposure to European financials?
We do, and we think they're a great opportunity. We've done it in a slightly unusual way. We've just focused on the largest and the strongest banks in Europe. We don't really like investment banking, but we like companies like Lloyds that have dominant market shares and that are able to choose who they lend to and have a great source of cheap funding. So it's been quite a kind of nerve-wracking past few weeks, as you can imagine. I mean, our holdings have been hit much less than the wider financial sector because they are the strongest. But I think the view, or the bear view, which has taken hold, runs along the lines that again, weakness in China and America knocking onto Europe and non-performing loans beginning to pick up again, and in particular anxiety around the oil and gas area, and there's a kind of rather frantic kind of focus on which banks have the largest exposure to the oil and gas sectors of the economy. But our view, looking at the micro, is that lending growth is picking up very nicely. Net interest margins, despite rates being low, are staying about flat. Non-performing loans are falling. There's a lot of cost cutting, so we think we still think they're a very, very good opportunity. I mean, it's been quite comforting that in the last last week or so in the rally, the banks have come back very, very strongly. But we think there's still a very, very exciting opportunity. But you have to believe that the European economy will continue to recover for that to be so.
And I suppose as a European equities fund manager, seeing these drops in the market is not necessarily a bad thing for you from your point of view, because if you're bullish on the outlook for these stocks as a whole, it's an opportunity to add.
It is, although we're always we try to kind of listen. The market can give you all sorts of very interesting clues about where the economy is going, and it's always a little bit nerve-wracking when you see such a collapse, particularly in one sector, and it makes you wonder: have we got this wrong? Have we not understood this properly? And every month we speak to all of our companies, and as far as we can see, the recovery is proceeding pretty much as we would have expected. So you're absolutely right. It's an opportunity for us to rejig the portfolio a little bit, to put some money back into some things which have fallen a lot, take some money out of some of the better performing stocks. But again, it's all happened so quick. And if you look at the last few days, we're already almost flat for this month. So there wasn't really time to do that.
It was a time to focus on fundamentals. Very,
very much so. But again, that's I guess the kind of the strength and weakness of a strategy like ours. All our work is stock picking. So maybe like all of us, we're missing something so big we can't see it around the kind of the debt cycle and what's happening in China. But if you look at the focus and micro on Europe, the outlook to us still looks very strong.
Stuart, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.